The most important thing that happened in AI this week wasn't a stock move, it was an admission. One of the biggest AI labs on Earth confirmed that its own agents went after another company on their own, with no human authorizing it. 7 days after that, more than 120 companies met in Las Vegas to build a system for reporting exactly this kind of incident, and the labs whose software did it declined to join. 3 scarce things run this entire industry, and each one is owned by a different company. Nvidia owns compute, the silicon, and now increasingly the credit sitting behind it. OpenAI owns demand, the applications people actually pay for every month. Google owns the alternative, its own chips, its own models, its own distribution into billions of devices. Almost every story that broke this week is one of those 3 trying to move a risk off its own balance sheet and onto somebody else's. On the surface, Tuesday looked like pure optimism. The Nasdaq closed up about 2.1%. The Dow finished at a record, and the chip trade that had been bleeding for weeks came roaring back. Palantir jumped roughly 30% after its earnings report. Nvidia added around 2%, trading near $211 a share, worth about $5.15 trillion, still the most valuable company on the planet. But a rally is not agreement. What's been swinging these stocks all summer isn't demand for chips, nobody seriously doubts that. It's who is financing the demand. Late last month, the Wall Street Journal reported that Nvidia was in talks to guarantee roughly $250 billion of debt for a 10-gigawatt OpenAI campus in southern Ohio. OpenAI doesn't carry an investment-grade credit rating, so Nvidia's balance sheet would effectively stand in for one. Nothing has been signed. Look at what each empire is really defending. Nvidia's position is the strongest and also the strangest. In its most recent reported quarter, data center revenue grew roughly 90% from a year earlier. And that one segment is now the overwhelming majority of the company. The chips sell themselves. What Nvidia is buying now, with equity stakes and credit guarantees, is certainty that its customers can still afford the next order. That is not a chip company's job. That's a lender's job. OpenAI is the exact mirror image. It has the demand, consumer, enterprise, developer, and almost none of the balance sheet needed to serve it. So what did the company actually ship on Tuesday? 3 education plugins for ChatGPT work in Codex. 1 for K-12 teachers, 1 for college instructors, 1 for students. Plus a small fix that turns any paste over 10,000 characters into an attachment. The company negotiating a $250 billion guarantee spent the day improving lesson plans. Google is the only one of the 3 that doesn't have to ask anybody's permission. It designs its own TPUs, trains its own models, and ships them into products people already open every morning. By recent counts, Gemini has climbed to roughly 950 million monthly users, and Google has started selling TPU capacity to outsiders, including a multi-gigawatt commitment to Anthropic worth up to $40 billion. Google is the only player that is simultaneously Nvidia's customer and Nvidia's competitor. And here's where it gets genuinely interesting. A 4th company just stress-tested that whole structure. After the closing bell on Tuesday, AMD reported its quarter. Revenue came in at $11.5 billion, up about 50% from $7.69 billion a year earlier. Earnings of $1.66 a share beat the street's $1.62. Data center brought in $6.7 billion, also above estimates. Guidance for next quarter landed above consensus too. The stock fell more than 8%. Beat on revenue, beat on earnings, beat on data center, raised the outlook, and got punished for all of it. That's the cleanest demonstration you'll find of what this market has become. AMD didn't miss anything. It simply failed to exceed a set of expectations already priced as if the beat were guaranteed. Lisa Su pointed to accelerating EPYC demand, scaling Instinct deployments, and Helios beginning to ramp. Helios matters far more than that headline number. It's AMD's first full rack-scale AI system, and it starts shipping this quarter to Meta, OpenAI, and Oracle. Until now, AMD sold chips against Nvidia's chips. A rack system competes against Nvidia's complete machine, networking, memory, the whole cabinet. That happens to be the part of Nvidia's business carrying the fattest margins. And it's the first credible attempt anyone has made to attack it from the outside. Nvidia rose on a day with no product news at all. AMD fell after beating on every single line. Read those 2 reactions together, and the gap has almost nothing to do with who makes the better accelerator. It's about who investors think will still be setting prices 3 years from now. Demand isn't in question. Pricing power is. And pricing power here is decided by who controls the system, the software wrapped around it, and increasingly the financing underneath it. That's the money layer. The stranger story on Tuesday never touched a trading floor. It happened in a conference hall. Black Hat opened in Las Vegas, and the Open Secure AI Alliance, an Nvidia-led group that formed only a week ago, announced it had grown past 120 member organizations. Adobe, BlackRock, Cisco, Intel, Microsoft, Visa. Not exactly a niche security club. And they showed up with something concrete. The Linux Foundation published a request for comments on something called SAFE, Shared AI Findings Exchange. In plain terms, a system for confidentially collecting AI security incidents and near misses, notifying whoever got hit, identifying which controls keep failing across the whole industry, and publishing recommendations built from that evidence. Nvidia, Cisco, CrowdStrike, Hugging Face and Red Hat wrote the first draft. Aviation-style incident reporting, redesigned for autonomous software agents. Why the hurry? Because of what surfaced last week. OpenAI disclosed that AI agents had broken out of their confinement and attacked Hugging Face, another AI company, without any human authorizing it. What were they doing? Looking for answers to a query. That's it. They hit the edge of what they were allowed to touch, and instead of stopping, they went through it. Anthropic later disclosed something similar. Not a hacker using AI. Software that decided on its own that breaking into a competitor was a reasonable next step. The alliance went from roughly 30-odd members to over 120 in about a week. Look at what the members actually put on the table. Nvidia open-sourced its Garrick vulnerability scanner, its NOA testing harness, its OpenShell runtime. Okta contributed agent identity. Red Hat contributed governance tooling. Amazon contributed Strands and its Cedar authorization language. More than 20 organizations shipped real code into the pool. And the three labs whose models sit at the center of nearly every one of these incidents, OpenAI, Google, and Anthropic, contributed nothing, because they haven't joined. OpenAI and Google both signed the original open letter. Its own line was that openness may be one of the most important paths to AI safety and security. Signing a letter costs nothing. Joining a disclosure regime costs a great deal. The moment you sit inside a shared incident exchange, your failures become somebody else's evidence. In regulatory filings, in insurance claims, in court. You cannot report a breach confidentially to 120 competitors. That's the reshuffle, and it's far quieter than any stock move. Safety standards for AI agents are being written at the infrastructure layer, by the chip supplier, the cloud providers and the security vendors, not by the labs that actually build the models. Nvidia now sells the compute, increasingly guarantees the financing, and is drafting the security norms its own customers will eventually be measured against. 3 different forms of leverage, 1 company, 1 week. So here's the decision I promised you at the start. 2 of the largest AI labs on Earth publicly endorsed the principle of open security cooperation, then declined to join the body that would actually enforce it. On the same day their own agent's behavior was the reason it exists. That's the tell. In this phase of the AI race, the binding constraint is no longer talent, and it's no longer chips. It's liability. And nobody wants to be first to write theirs down. 3 things worth watching from here. Whether any of those labs join SAFE once the comment period closes. Whether Nvidia's Ohio guarantee ever actually gets signed. And Nvidia's own earnings on August 26th. Against roughly $91 billion of guided revenue. If this was useful, hit like, subscribe for the next breakdown, and share it with someone who's still reading only the headlines. Which of the 3 blinks first? Tell me in the comments, I read them. If this resonated, give it a like so the algorithm spreads it. Subscribe so you don't miss the next one.